You know what nobody's talking about? The fact that every single electric vehicle rolling off the assembly line right now is consuming more silver than an entire household used in a year just 2 decades ago. And I'm not talking about a little bit more. I'm talking about exponentially more. The average EV uses between 25 to 50 grams of silver. Some models, they're pushing 80 grams. Now multiply that by the 14 million electric vehicles manufactured last year alone, and you start to see the problem. We're looking at roughly 700 metric tons of silver just for EVs in 2024. But here's where it gets interesting. That number is projected to triple by 2030. Triple. And the silver isn't even there. Let me paint you a picture of what's actually happening right now in the silver market, because the mainstream financial media is completely missing this story. They're so focused on gold hitting new highs that they've ignored the fact that silver is sitting in one of the tightest supply situations we've seen in modern history. And it's not just about EVs. It's about solar panels, 5G infrastructure, medical devices, and a dozen other technologies that can't function without silver. But EVs? They're the accelerant on an already raging fire. Think about this for a second. Silver is the most conductive metal on Earth. Nothing else comes close. Not copper, not gold, not any synthetic material we've developed. When you're building an electric vehicle that needs to efficiently transfer electricity from a massive battery pack through dozens of circuits, sensors, and control systems, you need silver. There's no substitute that works as well. Engineers have tried. They've experimented with copper alloys, with graphene composites, with every alternative you can imagine. But when it comes to the critical connections, the high-performance applications, the safety systems that can't fail, they come back to silver every single time. Now here's what the auto manufacturers aren't telling you. They're locked into production commitments that assume silver will always be available at reasonable prices. Ford has committed to producing 2 million EVs annually by 2026. GM is targeting 1 million EVs by 2025 and ramping up from there. Tesla's building new gigafactories in Texas, Berlin, and Shanghai. Volkswagen, BMW, Mercedes, Hyundai, every major automaker on the planet has announced massive EV production targets. They've invested hundreds of billions of dollars into retooling factories, training workers, and building supply chains. But nobody secured the silver supply. I want you to understand how insane this is. These companies are making 10-year production commitments based on the assumption that they'll be able to source a metal that's already in deficit. The Silver Institute reported that 2023 saw a physical silver deficit of 142 million ounces. That's the difference between what was mined and recycled versus what was consumed by industry. And 2024? The deficit grew to 215 million ounces. We're not talking about a temporary imbalance. We're talking about a structural shortage that's getting worse every single quarter. Let me tell you about a conversation I had with a procurement officer at one of the major German automakers. I can't name the company, but they're one of the big 3. This person told me, off the record, that they're already seeing delivery delays on silver-based components. Not major delays yet. We're talking about 2 weeks here, 3 weeks there. But it's happening. And when I asked what their contingency plan was if silver prices doubled or tripled, you know what they said? They didn't have one. Their entire production model assumes silver availability at current price ranges. If silver goes to $50 an ounce, let alone $100, their profit margins on EVs completely evaporate. But it gets worse. Because it's not just about the silver in the vehicles themselves. It's about the infrastructure. Every EV charging station uses silver in its electrical components. Every solar panel that's being installed to create green energy for these vehicles uses silver. The average solar panel contains about 20 grams of silver. Last year, we installed enough solar capacity globally to consume roughly 5,500 metric tons of silver. And solar installations are accelerating. China alone is planning to double its solar capacity by 2030. Europe has massive green energy mandates. The United States just passed the Inflation Reduction Act with hundreds of billions in subsidies for renewable energy. All of it requires silver. So, you've got this perfect storm developing. Demand is exploding from multiple directions simultaneously. EVs, solar, 5G networks, medical devices, industrial applications. And on the supply side? We're barely keeping up with current demand, let alone future growth. Global silver mine production has been essentially flat for the last 5 years. We're producing around 830 million ounces annually from mining. That number hasn't meaningfully increased since 2016. Why? Because most silver comes as a byproduct of other mining operations. About 70% of silver production comes from lead, zinc, copper, and gold mines. You don't just open a new silver mine when prices go up. It doesn't work that way. And here's something that should terrify anyone paying attention. The average silver mine takes 10 to 15 years from discovery to production. You need to find the deposit, prove the reserves, get permits, build infrastructure, and start operations. Even if companies started aggressively exploring for silver today, even if they found massive new deposits tomorrow, we wouldn't see that silver hitting the market until the mid-2030s at the earliest. But the EV revolution is happening right now. The demand is here today. Let me give you some specific numbers that illustrate just how tight this market is. The London Bullion Market Association, which tracks physical silver inventories, reported that registered silver stocks in their vaults dropped by 35% in 2024. That's physical silver that's available for immediate delivery. It's gone. The COMEX, which is the major futures exchange for silver in the United States, saw its registered silver inventories fall to levels we haven't seen since 2015. We're talking about roughly 70 million ounces of registered silver available for delivery, against a market that trades hundreds of millions of ounces in paper contracts every single day. Now, I need to explain something about how the silver market actually works, because this is where things get really interesting. The vast majority of silver trading happens in paper markets: futures contracts, ETFs, derivatives. For every ounce of physical silver that exists, there are probably 100 to 200 ounces of paper silver being traded. This works fine as long as everyone's playing the same game, as long as most people are happy to settle in cash rather than demanding physical delivery. But what happens when industrial users, the companies that actually need physical silver to manufacture products, start competing for that limited physical supply? What happens when they can't afford to wait, when they need silver now, or their production lines shut down? You start to see the paper market and the physical market diverge, and we're already seeing early signs of this. The premiums on physical silver coins and bars have been elevated for months. When you go to buy physical silver from a dealer, you're paying $3 to $5 over spot price, sometimes more. That premium used to be 50 cents to $1. The market is telling you that physical silver is harder to get than the paper price suggests. Industrial users are paying even higher premiums for the specific forms of silver they need. Silver paste for solar panels, silver alloys for electrical contacts, high-purity silver for medical applications. These aren't trading at spot price. They're trading at significant premiums because supply is tight. And here's where it connects to something bigger. Because silver isn't just an industrial metal. It's also a monetary metal. It's been money for 5,000 years, and right now, we're seeing a massive shift in how countries and central banks think about monetary metals. You've got the BRICS nations, Brazil, Russia, India, China, South Africa, actively working to reduce their dependence on the US dollar. They're talking about gold-backed trade settlements. They're accumulating physical gold at record rates. But silver? Silver is the poor man's gold. It's the metal that regular people can actually afford to accumulate. And if we see any kind of monetary reset, any kind of shift away from pure fiat currency systems, silver is going to play a role. China understands this better than anyone. They've been quietly accumulating silver for years, not through official central bank purchases that get reported, but through state-owned enterprises, through import quotas, through a dozen different mechanisms that don't show up in the official statistics. We know that China imported over 5,000 metric tons of silver in 2023. That's roughly 160 million ounces. Where did it go? Not into jewelry, not into industrial applications that would show up in export data. It went into vaults, into strategic reserves. China is preparing for a world where physical commodities matter more than paper promises. India is doing the same thing, just more openly. Indian silver imports hit record levels in 2024. The Indian people have a cultural affinity for precious metals. They understand that paper currency loses value over time. They've lived through currency crises, through inflation, through government confiscation of gold. They know that physical silver is real wealth that can't be printed, can't be devalued by central bank policy, can't be frozen in a bank account. And as India's middle class grows, as hundreds of millions of people enter the consumer economy, they're buying silver. Now let me connect this back to the EV situation, because this is where the shortage becomes critical. You've got industrial demand that's absolutely inflexible. Auto manufacturers can't build EVs without silver. Solar panel makers can't produce panels without silver. These aren't discretionary purchases. This is demand that has to be met, or production stops. And you've got investment demand that's growing as people wake up to inflation, to currency debasement, to the instability of the financial system. These two sources of demand are now competing for the same limited supply of physical silver. Something has to give. Either prices have to rise dramatically to ration the available supply, or we're going to see actual shortages where industrial users can't get the silver they need. And I'm not talking about theoretical shortages. I'm talking about production lines shutting down. I'm talking about EV manufacturers missing delivery targets because they can't source components. I'm talking about solar panel installations being delayed because the panels don't exist. Quick aside here, because this connects to something important for anyone thinking about their financial future. If you're sitting on $100,000 or more in retirement accounts, traditional IRAs or 401ks, you might want to look into how precious metals IRAs work. I put together a free guide that covers the basics, how you can get physical gold or silver into a retirement account without triggering taxes or penalties. It's in the description below. Not trying to sell you anything, just information that might be relevant given what we're seeing in these markets. Worth understanding your options. Anyway, back to the supply situation. Because there's another factor that nobody's talking about. Recycling. In theory, silver is infinitely recyclable. Every ounce that's ever been mined still exists somewhere. But here's the problem. A huge amount of silver is being used in applications where it's essentially unrecoverable. When you put silver into a solar panel, that silver is locked up for 25 to 30 years. When it finally comes time to recycle that panel, the amount of silver you can economically recover is minimal. The silver is dispersed in tiny amounts across the entire panel. It's mixed with other materials. The recovery process is expensive and energy-intensive. Same thing with EVs. The silver in an electric vehicle is spread across dozens of components. Tiny amounts in each circuit board, each sensor, each connection. When that vehicle eventually gets recycled, maybe 15 or 20 years from now, recovering that silver is going to be difficult and expensive. We're taking silver out of above-ground stocks, where it's available for immediate use, and we're locking it into long-term applications where it's effectively removed from the supply chain for decades. This is completely different from how silver was used historically. When silver was primarily used for coins, jewelry, and silverware, it stayed in forms that were easy to recycle. You could melt down old coins and make new ones. You could recycle jewelry. The silver stayed in the supply chain. But now, we're consuming silver in ways that remove it from circulation, and we're doing it at an accelerating rate. Let me give you a historical parallel that might help you understand where this is going. In the 1960s, the United States was minting coins with 90% silver content. Dimes, quarters, half dollars, all made with real silver. But industrial demand for silver was growing. Photography was booming, electronics were expanding, and the US government realized they had a problem. They were putting silver into coins at $1.29 per ounce, the official price, but industrial users were willing to pay more. People started hoarding the coins because the silver content was worth more than the face value. So in 1965, the US government made a decision. They stopped making silver coins. They switched to copper-nickel-clad coins that had no silver content. And you know what happened? The silver that had been locked up in coins, billions of ounces, flooded into the industrial market. It took years for that silver to be absorbed, decades actually. That's one of the reasons silver prices stayed relatively low through the 1970s and 1980s, even as gold was soaring. There was this massive overhang of silver from melted coins. But here's the thing. That silver is gone now. It's been consumed, used up in industrial applications. And there's no similar source of above-ground silver waiting to flood the market this time. The silver that exists in ETFs, in coins, in bars, that's owned by investors who are holding it precisely because they think it's going to be worth more in the future. They're not going to sell it unless prices rise dramatically. And even if they did, Even if every ounce of investment silver came to market, it wouldn't be enough to meet the growing industrial demand. The math just doesn't work. We're producing about 830 million ounces from mining annually. We're recycling maybe 180 million ounces. That's roughly 1 billion ounces of supply. But industrial demand alone is running at about 900 million ounces. Investment demand adds another 200 million ounces. We're short by 100 to 200 million ounces every single year. And that deficit is growing as EV production ramps up, as solar installations accelerate, as 5G networks expand. Where's the silver coming from to fill that gap? It's coming from above-ground inventories, from the stocks that have been built up over decades. But those inventories are finite. They're being drawn down. And at some point, probably sooner than most people realize, we're going to hit a wall where there simply isn't enough silver available at current prices to meet demand. When that happens, prices are going to have to rise. Not by 10% or 20%. We're talking about multiples. Silver could easily go to $50 an ounce, $75, $100, maybe higher. Because at current prices, around $30 an ounce, there's no incentive to dramatically increase production. Mining companies can't make enough profit at $30 silver to justify the massive capital investments required to open new mines. But at $75 or $100, suddenly those projects become economically viable. Suddenly you see a rush to develop new supply. But remember what I said earlier. It takes 10 to 15 years to bring a new mine online. So even if prices spike tomorrow, even if silver goes to $100 next month, we're not going to see meaningful new supply until the late 2030s. In the meantime, industrial users are going to be competing for limited supply, and the companies that can't secure silver are going to have serious problems. Think about what this means for the EV industry. These companies have made massive commitments. They've told investors, they've told governments, they've told the public that they're going to produce millions of electric vehicles. They've taken subsidies and tax credits based on those commitments. They've built factories, they've hired workers, and now they're facing a situation where one of the critical materials they need might not be available in sufficient quantities. What are their options? They can try to lock in long-term supply contracts, but that means paying higher prices now and locking in those costs for years. They can try to reduce the amount of silver in each vehicle, but there are limits to how much you can reduce it without compromising performance and safety. They can try to pass the costs on to consumers, but EVs are already expensive, and higher prices mean fewer sales. Or they can slow down production, miss their targets, and face the consequences from investors and regulators. None of these are good options, and the companies that are going to survive this are the ones that recognize the problem now and start taking action. The ones that secure supply agreements, that invest in recycling technology, that redesign their products to use silver more efficiently. The companies that wait, that assume the problem will solve itself, they're going to be in serious trouble. And it's not just the auto manufacturers, it's the entire supply chain. The companies that make the electrical components, the circuit boards, the sensors, the companies that refine silver, that fabricate it into the specific forms needed for industrial applications. Everyone in this chain is going to be affected. We're going to see consolidation, bankruptcies, supply disruptions. It's going to be messy. But here's what really keeps me up at night: the geopolitical implications. Because silver isn't evenly distributed around the world. The major silver-producing countries are Mexico, Peru, China, Russia, Chile, Bolivia, Poland, and Australia. Notice anything about that list? A lot of those countries aren't exactly stable, friendly, or reliable partners for the United States and Europe. Mexico is dealing with cartel violence. Peru has political instability. China and Russia are strategic competitors. Bolivia has a history of nationalizing resources. What happens if one of these countries decides to restrict silver exports? What happens if there's a coup, a revolution, a trade war? What happens if China decides that silver is a strategic resource and stops exporting it? They're the world's third largest producer, and they're already a net importer because their domestic demand is so high. But they could easily restrict exports of refined silver, of silver-based components, of the specialized products that other countries need. This is the same playbook we've seen with rare earth elements. China controls about 70% of global rare earth production, and they've used that control as a geopolitical weapon. They've restricted exports to Japan, to the United States, to countries that cross them politically. Silver could become the same kind of strategic resource, a metal that's critical for modern technology, controlled by a small number of countries, used as leverage in international relations. And the West is completely unprepared for this. We've outsourced so much of our manufacturing, so much of our supply chain, that we're dependent on other countries for critical materials. We don't have strategic silver reserves the way we have strategic petroleum reserves. We don't have domestic refining capacity to process silver ore into the high-purity forms needed for industrial applications. We're vulnerable. Now, I want to talk about what this means for silver prices, because I think we're on the verge of a major repricing. Silver has been stuck in a range for years. It hit $50 in 2011, crashed back down, and has been bouncing between $15 and $30 for over a decade. A lot of people have given up on silver. They think it's a dead investment, that it's never going to break out. But they're missing what's happening beneath the surface. The fundamentals have never been better. We have a structural supply deficit that's growing every year. We have explosive demand growth from EVs, solar, and other technologies. We have investment demand that's starting to wake up as people realize that inflation isn't transitory, that central banks are trapped, that the financial system is fragile. And we have a market structure where a relatively small amount of buying can move prices dramatically because the physical market is so tight. All it's going to take is a catalyst. Maybe it's a major industrial user announcing they can't source enough silver. Maybe it's a mine closure in Peru or Mexico. Maybe it's China restricting exports. Maybe it's a financial crisis that sends investors rushing into hard assets. But when that catalyst hits, when silver starts to move, it's going to move fast. We could see $40, $50, $60 in a matter of months. And once it breaks through those old resistance levels, once it takes out that 2011 high of 50, there's no telling how high it could go. Because here's the thing about silver. It's the most volatile of all the precious metals. When it moves violently. In 1979 and 1980, silver went from $6 to $50 in less than a year. In 2010 and 2011, it went from $18 to $50 in about 8 months. When silver catches a bid, when momentum builds, it can double or triple in a very short period of time. And right now, we're sitting at the bottom of what could be a massive move. The smart money is already positioning for this. You're seeing hedge funds accumulating silver. You're seeing billionaires like Elon Musk, who understands the EV supply chain better than anyone, talking about commodity shortages. You're seeing mining companies that were left for dead starting to get attention from investors. The pieces are falling into place, but most people aren't paying attention. They're focused on stocks, on crypto, on whatever the latest trend is. They're not looking at the physical world, at the actual materials that make modern life possible. They're not thinking about what happens when you can't get the silver you need to build the products that everyone wants. They're going to be caught completely off guard when this shortage becomes obvious, when prices start to spike, when the headlines start screaming about a silver crisis. And by then, it'll be too late to position yourself advantageously. The best time to buy silver was 5 years ago. The second best time is right now, before the crowd figures out what's happening. Because once this story goes mainstream, once everyone understands the severity of the shortage, prices are going to gap up. You won't be able to buy physical silver at anything close to current prices. Premiums will explode. Delivery times will stretch to months. It'll be like trying to buy toilet paper in March 2020. Except this shortage isn't going to resolve in a few weeks. This is a multi-year structural problem. So here's what you need to understand. The silver shortage in electric vehicles isn't just worse than reported. It's worse than most people can imagine. We're talking about a fundamental mismatch between supply and demand that can't be resolved quickly. We're talking about a critical material that's essential for the energy transition, for the technology revolution, for the future that governments and corporations have promised us. And we don't have enough of it. The companies that recognize this and adapt are going to survive. The ones that don't are going to struggle. The investors who position themselves in silver now, before the shortage becomes obvious, are going to do extremely well. And the people who ignore this, who assume everything will work out, who trust that the market will magically produce the silver we need, they're going to be shocked by what's coming. This is one of those rare moments where you can see a major market dislocation developing in real time, where the fundamentals are screaming that something big is about to happen. where the smart money is quietly positioning while the crowd is distracted. Pay attention. Do your research. Understand what's at stake. Because the silver shortage is real, it's growing, and it's going to reshape the EV industry, the energy sector, and the precious metals markets in ways that most people aren't prepared for.